Have you ever felt just, well, completely swamped by the sheer volume of news, all the reports, the articles hitting your feed every single day? It really is like trying to drink from a fire hose when all you want is the crucial intelligence. And especially when you're tracking a global titan like Nike, I mean, how do you cut through all that noise to get right to the core of what's really going on? Well, today, our deep dive is into exactly that. Nike's highly anticipated fiscal 2025 financial results and also the massive strategic realignments they're undertaking right now. This isn't just about, reading off numbers. It's about understanding how a brand of Nike scale is fighting to reposition itself for future growth. It's a really dynamic and competitive landscape out there.
Absolutely. And our mission for you today is pretty clear. We're going to unpack those key financial figures. We'll help you understand Nike's bold new game plan for recovery and growth, and then we'll explore what these significant shifts truly mean, not just for the brand and its partners, but ultimately for you, the consumer.
Yeah, and we're pulling directly from their official fiscal 2025 financial report and also a detailed analysis that includes direct excerpts from their recent earnings call. So that's how we ensure you get, the real insider's view. You'll walk away not just with the headlines, but with the crucial insights, maybe some surprising details behind the numbers.
Yeah.
Basically a shortcut to being truly well-informed on this major player.
Okay, so let's unpack this. These top-line numbers for Nike's fiscal year 2025 and their fourth quarter, which ended May 31st, they look pretty brutal, honestly.
Yeah.
What was the most alarming data point for you looking at those Q4 and full-year results? Was there any kind of silver lining amidst those declines?
Well, the sheer scale of the decline is certainly alarming. Yeah. For the full year, revenues were $46.3 billion. That was down 10% compared to the prior year. Even currency neutral, still down 9%. And the fourth quarter revenues, $11.1 billion. That's a decrease of 12% reported, 11% currency neutral. I mean, to really grasp the scale, just think about it. A company Nike size losing over $5 billion in revenue in a single year. That's not just a blip, right? It tells us something fundamental has shifted, either consumer behavior or the competitive landscape. Maybe both, hitting even a giant like Nike this hard.
It's really striking when you see where these declines hit hardest. So Nike direct revenues for Q4 are down a significant 14%. And within that, their digital sales, Nike brand digital, dropped an even steeper 26%. But wait a minute, their Nike-owned physical stores actually saw a small increase, like 2%. That really challenges the sort of conventional wisdom about retail trends, doesn't it? How did Nike manage that, even with everything else falling?
That's a great observation, and it does highlight a nuanced point. While digital really struggled, that physical store increase suggests that maybe when consumers do go into a Nike-owned store, it's a strong experience.
Right.
Perhaps they're leaning into those curated in-store experiences that, digital just can't replicate. Meanwhile, wholesale revenues for Q4 were down 9%. And it wasn't just one segment or region. Revenues for both the Nike brand and Converse were down across all geographies and territories. It shows this is a widespread challenge, not just isolated.
Right. So with all those revenue declines, what does this actually mean for their profitability and their earnings? Because, on the surface, it's not looking great.
You're absolutely right. The gross margin for Q4 decreased 440 basis points. It landed at 40.3%. So that's a 4.4 percentage point drop in their profit margin. Primarily, they said, due to higher discounts and changes in channel mix. And the net income for Q4 was just $0.2 billion, down a significant 86%. Diluted earnings per share also dropped by 86% to $0.14. For the full year, net income was down 44% to $3.2 billion, with diluted EPS down 42% to $2.16. These are some tough numbers.
So, okay, with numbers like that, the natural question becomes, how did the market respond? You'd maybe expect a massive sell-off, right? But Nike stock actually rose a bit, like 1.08% in after-hours trading. That seems kind of counterintuitive. Is it just about beating really lowered expectations, or is there maybe something deeper going on that investors are buying into?
It's probably a combination, but yeah, primarily the market rewarded them for exceeding the forecasts. Their actual Q4 EPS of 13 cents did surpass the forecast of Sailor Joel's and 12 cents by a solid, 16.67%. And their Q4 revenue of $11.1 billion also beat the forecast of $10.7 billion. So yeah, while the year-over-year numbers are definitely down, beating even those lowered expectations gives a psychological boost. It suggests maybe a cautiously optimistic market sentiment. Investors perhaps giving them credit not just for the beat, but maybe for the aggressive strategic plans they're now talking about.
Okay, those numbers certainly paint a tough picture. But a company like Nike doesn't just sit still, right? So what's their bold response? What exactly is this win now strategy, and how is it designed to, turn the ship around? Especially with this thing they're calling the sport offense realignment.
Right. Well, the president and CEO, Elliott Hill, He openly acknowledged that financial results are, quote, not where we want them to be. Pretty direct. However, he stated they expect the business to improve as a result of progress from their Win Now actions. And this sport offense is described as the next step to accelerate these actions and basically reposition the business for future growth. This isn't just shoveling deck chairs, you know. By flattening leadership and creating these sport-obsessed teams, Nike is essentially admitting their old structure was maybe too slow, too siloed for today's market. It feels like a play for agility, aiming to drive distinction in key sports, build out that product portfolio, create inspiring stories, and elevate the entire marketplace.
So how are they actually enacting this? The strategic turn of the page, as they put it, within the company itself. It sounds like a pretty dramatic internal shift.
It seems like it really kicked off back on October 14th, 2024. They had this declaration to employees. We are a sport and a growth company. We will put the athlete at the center of everything. Then they align teams against 5 specific Win Now actions: culture, product marketing, marketplace, and what they call their ground game. And there's a really sharp focus now: 5 key sports, 3 key countries, and 5 key cities. Very targeted. A key part of the plan, too, is to aggressively right-size 3 huge franchises: the Air Force One, the Dunk, and the AJ1, the Air Jordan 1. And also return Nike Digital to being a premium destination.
And what does this mean for their internal structure then? You mentioned flattening leadership. How extensive are these changes really?
Yeah, to make this happen, the leadership structure has indeed been flattened quite significantly. They mentioned changes made to 11 of the 15 direct reports to the CEO. That's substantial. They've also been investing heavily in big sport moments, key product launches, trying to, quote, win back our brand voice and help rebalance that product portfolio. And crucially, instead of the traditional men's, women's, kids structure, the Nike, Jordan, and Converse teams will now be reorganized. They're moving into dedicated cross-functional sport-obsessed teams organized by sport. The goal seems to be creating more dimension, more distinction for the brands, making them more competitive and hopefully accelerating growth. It's a really different way of organizing a massive company like Nike, almost like trying to inject a bit of that startup mentality back into a giant corporation. What do you think the biggest cultural hurdle is in making a shift like that actually stick?
Oh, that's a great question. Because these kinds of internal reorganizations, they're notoriously difficult to execute, right? Especially in a company of Nike's size and history. I think beyond just the market conditions, the biggest internal hurdle might just be getting those long-established teams to break down the silos, to truly think cross-functionally and, sport-obsessed. It requires a huge cultural shift, not just a structural one. So shifting from that internal strategy to how they're reaching you, the consumer, what specific changes are they making to their marketplace approach and their product innovation strategy?
Well, the new approach aims for what they're calling an integrated marketplace. So they are prioritizing and investing in wholesale partners, again, strategically adding more points of distribution to reach a wider range of consumers. It seems like a bit of a course correction there. At the same time, Nike Direct, their direct-to-consumer channel, is showing some early signs of being that more premium destination, especially when it's tied to a specific sport moment or a key product launch. We've seen some specific examples they shared of successful wholesale partnerships, like collaborations with Dick's Sporting Goods on a 247 training collection, and with JD Sports for the Air Max 95. Apparently, those led to, quote, elevated presentations, better consumer connections, and increased sell-throughs. And direct-to-consumer is also seeing some wins. Their Nike LA door at the Grove had its best sales day in 3 years after hosting a global After Dark run series. Also kind of cool, following the French Open finals, Nike Digital saw a 30% bump in day-to-day sell-through for the looks worn by Carlos Alcaraz and Yannick Sinner, so connecting product to moment.
Yeah, what's particularly insightful here, I think, is that focus on expanding distribution again. You might start seeing Nike products in places you maybe haven't before, reaching new demographics. For instance, they talked about a Gen Z targeted experience with Urban Outfitters, becoming the #1 brand in selected doors right on opening weekend. They also entered over 200 women's-led doors, including boutiques like Aritzia. That's interesting. And then the big one, they announced a major new partnership with Amazon, launching this fall 2025. This will carry a select assortment: footwear, apparel, accessories, and Nike will have a featured brand store on Amazon focused on running, training, basketball, and sportswear.
Okay, that Amazon partnership certainly expands reach, doesn't it? But doesn't it also risk diluting Nike's premium brand image, especially after they spent years pulling back from broader retail? How do they navigate that tension?
That's the crucial question, isn't it? It seems like a calculated risk. They were very clear it's a select assortment on Amazon, not the whole catalog. And they're specifically focusing on core performance and sportswear categories within a featured brand store. So the hope, presumably, is to reach new customers where they already shop, but still maintain those premium experiences through their own stores and their high-end partners. It's definitely a delicate balancing act as they try to rebalance their product portfolio and drive demand.
And speaking of that rebalancing, they're making progress there between sportswear and performance products. Nike Running, for example, grew high single digits overall for the quarter, and the Vomero 18 shoe apparently became a $100 million plus franchise in just over 90 days with strong sell-through.
Right.
It's a huge, huge success for a new shoe model. Their women's basketball business expanded more than 50% this fiscal year, highlighted by the release of A'ja Wilson's signature collection and her first shoe, the A1, which, get this, sold out in 3 minutes on Nike Digital in North America.
Wow, 3 minutes.
Yeah. And in sportswear, that look of running footwear, things like the P6000, Vomero 5, Shock saw continued strength. They're also reintroducing the Air Max 95 to a new generation. Looking ahead to fiscal year 2026, they expect that performance product momentum to continue. They mentioned a 9-box footwear lineup in running, delivering new innovation and building on apparel opportunities in training, golf, and tennis.
Okay, so Nike has this clear strategy, some exciting product innovations happening. But what about the significant challenges, the headwinds they're navigating, particularly concerning inventory and these newly issued tariffs?
Right, the challenges are real. Inventory for Nike, Inc. was $7.5 billion. That's actually flat compared to the prior year end, but it's still considered elevated. The company aims to be in a, quote, healthy and clean position by the end of the first half of fiscal 2026. So still some work to do there. This involves continued liquidation of excess inventory, mainly through their value stores and select value partners. They have made significant progress, they said, in managing down those classic footwear franchises, the Air Force One, the AJ1, the Dunk. Q4 declines for those accelerated to over 30%. So they're really trying to clear out that older stock and avoid that inventory bloat they've had issues with.
And then there's the elephant in the room.
Yeah.
The major financial impact of newly issued tariffs. What does this actually mean for Nike's costs? And I guess how might it eventually affect prices for you, the consumer?
Yeah, this really brings the issue of global supply chain resilience right to the forefront, doesn't it? Nike estimates a gross incremental cost increase of approximately $1 billion just due to these new tariffs. That's a huge number, a direct hit to their bottom line. So they outline 4 key actions they're taking to try and mitigate this impact. First, optimizing their sourcing mix. They plan to reduce China's representation in footwear imported into the U.S. from around 16% down to the high single-digit range by the end of fiscal 2026, reallocating production to other countries like Vietnam and Indonesia, presumably. Second, partnering with their suppliers and retail partners to try and share some of that structural cost increase. Third, implementing a, quote, surgical price increase in the U.S., with phased implementation starting this fall 2025. So yes, potentially higher prices for consumers on some items.
Surgical meaning not across the board, but targeted increases.
Exactly. And finally, evaluating corporate cost reduction where appropriate. For fiscal 2026, the estimated financial hit from tariffs is about 75 basis points to gross margin overall. But it's worse in the first half. Q1 alone could see about a 100 basis point negative impact.
Okay. So looking ahead then, what's their immediate financial guidance? And what's the sort of longer-term outlook for getting back to growth? It sounds like they're still expecting a bit of a bumpy road in the short term.
Absolutely. For Q1 of fiscal 26, revenues are expected to be down mid-single digits, so still declining. Q1 gross margins are expected to be down significantly, roughly 350 to 425 basis points. And that includes that big tariff impact we just talked about. Selling and administrative expense, SG&A, is expected to grow low single digits, so costs are still rising there. But on a more positive note, their holiday order book is actually up, with growth seen in North America, EMEA, and APLA, though that's partially offset by Greater China, where they acknowledge recovery will take more time due to unique marketplace characteristics there.
So zooming out a bit, what does all of this signal for their long-term trajectory? I mean, despite all these headwinds, the company leadership sounds pretty confident in their ability to navigate this environment.
Yes, they certainly project confidence. They say they believe there's a clear path to recovery ahead, and they intend to return to sustainable organic growth and ultimately those double-digit operating margins, which has been a kind of holy grail target for the company historically.
The CEO, Elliot Hill, he even drew this analogy to Rory McIlroy's Masters win, emphasizing the athlete mindset. Perseverance, competing, embracing challenges. It's a philosophy they say they are actively instilling in their teams, suggesting they view this current period almost like a tough training session before their next big competitive win.
Right. So we've taken quite a deep dive here into Nike's complex fiscal 2025 results and their really ambitious win now strategy, fueled by that sport offense idea to reignite growth. These numbers, yeah, they paint a picture of a company facing some significant headwinds, no doubt about it. But as we've seen, Nike isn't just, weathering the storm. They're actively trying to change the weather, launching what they clearly hope will be their biggest strategic comeback yet.
Exactly. We've explored how they're not only battling those declining revenues and the really significant tariff impacts, but also strategically trying to rebalance product lines, expand distribution again, and totally transform their internal structure to become more agile and, well, sport focused. It's a pretty comprehensive overhaul.
Yeah, from the soaring success of that Vomero 18 shoe and Everett Wilson's signature shoe selling out in minutes to that big new partnership with Amazon, Nike is clearly in a fight. They're demonstrating grit and determination to get back to consistent growth. It's a really fascinating case study in corporate resilience, I think.
And, that leads nicely to our final provocative thought for you today. Nike leadership keeps emphasizing this athlete mindset, daring to try, staying the course, competing every day, even when the results aren't where they want them to be. So what can this athlete mindset maybe teach us about navigating our own challenges, personal or professional ones, particularly when you're faced with unexpected headwinds or maybe the need for a major strategic pivot yourself? How might embracing that kind of courage and ambition, like Faith Kipyegon's Breaking 4 attempt they mentioned, how might that unlock your next chapter of growth? Something to think about.